Hello, everyone. Welcome to today's webinar with Assurity. I'm looking forward to the amount of engagement that we'll get today. I've already had a couple of questions about Maui and if we can just go today instead of waiting till April. So looking forward to the engagement and the discussion that we will have today. Luckily, there is still time to qualify for Assurity's Leaders Conference to Maui, which will take place in April of this year. So if you do have any questions about it, feel free to reach out to your regional teams and they can help you assist in figuring out kind of where you are in that qualification process and how we can get you qualified before the end of the year. My name is Paige Phelps and I am one of your regional sales managers here at Assurity. We have a really broad regional team that spans across the country. So there are a variety of other individuals in my position that can also help out in terms of product knowledge, sales, and marketing resources, basically your liaison to Assurity at the company. So feel free to reach out to your regionals with any questions after today's webinar. I do want to introduce a couple of housekeeping items before we get started. So if you have any questions throughout the webinar that you would like answered by the end of the webinar, go ahead and enter those into the questions feature in the webinar system. I will go ahead and answer those questions for you guys at the end of today's discussion, and we'll make sure that we get all of those questions answered for you. The second piece of this is that the webinar is also being recorded. So if you or anyone else in your offices, maybe some of the teammates on your in your networks want to take a listen to this webinar after today's presentation, it will be recorded and sent out in a follow-up email so that you will have access to it at a later date. The other piece that I would encourage you to do is get out a pen and paper. There will be some things in today's discussion that you'll definitely want to make sure to write down. So if you don't have that in front of you currently, go ahead and do so. One of the things that I would encourage you to write down is Assurity's Life Insurance Awareness Month site. If you've been following Assurity throughout the month of September, you've seen a lot of great things from a marketing standpoint that translate over to that Life Insurance Awareness Month concept. And so that website is liam.assurity.com. There's some really good podcasts and marketing materials, so make sure you write that down and take advantage of that. I will reference that again at the end of the presentation. And then what to expect for today, we're going to talk about some different prospects and things like that, case studies, conversation starters. So again, this is where I would encourage you to have your pens out and be ready to write stuff down because there will be a lot of good information throughout the presentation today that you will want to take and put into action after we wrap up. So first and foremost, I'd kind of like to start out by introducing us as a carrier. Whether you're familiar with Assurity or you're not, I think it's always really important to provide some perspective on who you are working with and who you're representing in terms of the products that you're representing. So Assurity is a mutual company based out of Lincoln, Nebraska. We're located here in the Midwest, but we've been around for over 125 years now. And because of that, we have an A- excellent rating with AM Best. We've got some really strong financial stability behind us, a really nice breadth of portfolio and processing availability. So we have an A- excellent rating with that rating company. The second piece that I think is important, especially in today's discussion, is that we have a variety of different things in our portfolio. So today we're going to talk about life insurance and how that works into our Life Insurance Awareness Month discussions and that campaign. But know that there's also different products such as disability products, critical illness products, we have annuities. There's a lot of different things within our portfolio that you as advisors can tap into to create really nice solutions for your clients. Some of that may come in the form of a package sale. So know that there's really good variety in our portfolio. The other thing that's important there is that provides perspective for us as we work with you to deliver you concepts and sales ideas that make sense in your market. So whether you're leading with life insurance, maybe you're leading from a property and casualty standpoint, maybe you're a registered representative, we understand how different things impact what you do on a daily basis, and we want to make sure we're bringing you that content and those sales ideas to help you continue to grow your book of business. And then the last piece here to introduce us as a carrier, we have everything in our portfolio from simplified to accelerated to full medical underwriting. And so the reason that's important to us and for you to understand is that we want to work with you and your clients the way they want to be worked with, right? So we want to make sure we're providing you convenience options. We want to make sure we're providing you well-priced options depending on how you and that client want to work together. So lots of good things at Assurity that we want to highlight here before we jump into today's webinar and today's agenda. So the topic for today's discussion is selling to the overlooked prospect. And what we're going to do is we're going to take the concept of life insurance and apply it into different life events that maybe we typically aren't thinking of and maybe that we're overlooking. So there's some different ways that we can approach life insurance and the sale of life insurance. And I think it's important to take a look at many different aspects of the prospects that we have access to. So as we jump into this, when we think about life insurance and kind of how it's evolved over time and where we originally generated prospects from, it was typical life events that kind of were the stakeholder in the development of life insurance sales, right? So it was marriage, it was buying a house, it was having a baby. I remember when I first came into this industry, advisors would tell me about finding newspaper clippings of marriage announcements or new baby announcements. And that's how we would prospect, and that's how we would get our leads and sell and develop concepts around it. So those things are still happening, right? Just the way we're approaching it and finding out that information is a little bit different. But there's other things in our environment that are also happening that I think are important to consider. And so we're going to focus on some of those other things that are happening that maybe we're overlooking for the purposes of today's conversation. So the first one here that we want to highlight is change in family status. We know that the divorce rate, unfortunately, is high in America, but that doesn't mean that that's a conversation to shy away from when we're working with our clients and helping them with their financial plans. So we'll show you kind of how to take something that maybe looked upon as more negative and turn it into a positive to really help those individuals with their financial picture. Changing job status is also a really interesting point to hone in on. So we'll kind of show you some different ways that that works. But one of the things that kind of jumps to the front of my mind right now as we're thinking about job status and the workplace environment is benefits, right? So we're talking about benefits. This is the one time of the year in the fall when consumers are actually talking about benefits with each other. It's a part of normal conversation. And so anytime someone changes a job or an employer group renews benefits, those benefits in that financial picture change. And so taking advantage of that, that's happening on an annual basis. And so we want to show you some of those aspects and those opportunities as well. And then finally, looking at the pre-retirement concerns. A lot of us make our living based on helping educate with retirement plans, but are we looking at them prior to retirement? And are we using life insurance to help supplement some of that stuff? So those are kind of the things that we're going to jump into today. I will let you know that I will be throwing tips out around the women's market as well. Like I mentioned at the beginning of the presentation, if you've been following Assurity this month during Life Insurance Awareness Month, our focus has been around the need for life insurance within the women's market. And so we'll throw in a bonus target market for you at the end of the presentation today and show you some of those statistics and things that you can capitalize on. But I'll also bring it up in conversation and mention it around these other things to consider as well. So first and foremost, let's talk about changes in family status and how we can provide insurance solutions when those changes happen. 40 to 50% of marriages are ending in divorce today. And like I said, unfortunately, that's kind of a sad statistic and a negative way to approach things. But what's really happening here is we're creating this opportunity naturally in our environment that if we're not helping those individuals, their financial pictures are changing at that point in time, and they're changing significantly. So you take a negative and turn it into a positive by making sure that everybody's taken care of in that situation. The other piece of this too is the average amount of child support that is due each month is about $480. So that totals about $6,000 a year almost if we round it up. And so when those things happen, it's creating an additional financial risk and exposure that definitely needs to be addressed that wasn't addressed before. So we really want to make sure we're helping our clients navigate this change in family status and utilize this to get their financial picture back on track and correct it into the right picture that's changed in the right direction. So with those changes, there's obviously unique needs and considerations. And these are some of the things that if I had a pen and paper in front of me, I would definitely be writing down. You can focus on a couple of them and really capitalize to make sure that your conversation and the way you approach this makes sense and is comfortable for you. But some of those considerations that we need to think about, do those clients and ex-spouse have existing life insurance policies? I know from personal experience, my parents were divorced, and so the last thing that they looked at and visited was about their life insurance policies. I was actually just talking to my mom a couple weeks ago, and she said, you know what, I bet your dad is still the beneficiary on those policies. And so even at this point in time, that divorce happened a while ago, but they still hadn't revisited that. And so there's definitely some things to consider there and to pay attention to. Our policies individual or tied to group coverage in a job. So oftentimes the objection that we get when we approach individuals about life insurance, even disability insurance, is that they have group coverage or they have something through a job. And so my spouse's employer will take care of it, or I'm covered under that policy. Well, if the spouses are split, those group coverages and those job coverages are going to look a lot different. Does the divorce agreement require life insurance coverage? So that's another interesting piece of it too. A lot of times those divorce agreements will have something that states that you have to have a certain amount of life insurance in force in order to take care of some of those expenses, especially with child support and alimony. And then the last piece here, do those beneficiaries need to change or be updated? And so that alludes back to the fact that I mentioned earlier. A lot of times those things aren't looked at and they are not revisited, but that gives us an opportunity to take a look at that stuff and also to create additional leads within that current policy. So we all know that the beneficiary is one of the best kind of word of mouth type of leads that we can gain. So when those beneficiaries change, we can use that as a kind of a second opportunity to approach those beneficiaries about their coverages too. So lots of different things in there to consider and to approach when you're talking to that individual about this change in family status. So how do you start that conversation? A conversation that might be uncomfortable for you to have or a little bit more awkward. We decided to give you some conversation starters so that you would have an idea of kind of how to approach that. So the first one here, you and your family's needs for life insurance coverage may have changed. I would like to position myself as a resource for you. So taking that approach that you want to educate, you want to help them through that time in their life, you want to be a resource, let me take care of it, you're worried about a lot of other things. Life insurance can be an important matter in divorces. I'd like to get together and talk about your life coverage and make sure it still meets your family's needs in the best way. So bringing the family into the conversation, meeting their lifestyle needs, taking care of that important matter for them so that they don't have to worry about it. And then finally, dealing with life insurance can be an important part of the divorce process. I'd like to sit down with you and talk about your coverage and your needs. So just 3 ways to kind of start that conversation from a little bit of a softer standpoint and really kind of get into what the goal is and what that needs to turn into and what that needs to look like. So with that, we put a case study together as well to kind of show you some different ways that life insurance products can be used in that type of situation. So how do you navigate those life insurance changes post-divorce? In our case study here, we have an example of Samantha and Paul, who are both 30 years old, but are divorced. Their daughter, Emily, is 3 years old, and Samantha is the primary caregiver for her daughter. So both of them have limited life insurance coverage through their employers, but we need to figure out a solution that makes a little bit more sense in this new change. So how does Paul support the life insurance payments to protect his child support payments in the event of his death, right? So we took a look at that statistic at the beginning of the presentation, an average of about $480 per month. That's a monthly thing that needs to continue to happen. And so how do we protect that in the event of death? First and foremost, we put together a solution to get Emily, the daughter, to the age of 18. If she's 3 years old now, we have a 15-year term policy that we can utilize to supplement during that time. So if Paul's monthly child support payments are $480 a month, almost $6,000 a year, we're going to take that monthly exposure and multiply that by 15, which will give us a $90,000 death benefit if we round up. The other thing that's important and an advantage with Assurity's products is that we're going to take that term life policy, but then we're going to go ahead and add a disability rider to it too, because that exposure is on a monthly basis. And if Paul's income suffers due to disability, that child support payment still needs to happen and still needs to occur. So we've taken this risk over a 15-year time period and protected it with a life insurance plan, but also with that disability rider if the income goes away. And we did all of that for $17.88 a month. And so that's a really inexpensive way to protect a pretty significant risk to that household with that term policy and that disability rider. On the flip side of it, remember, Samantha is also involved in this. And so she wants a stable policy that's going to give her extra life insurance coverage while she's raising her daughter. And so in this instance, we found that a whole life insurance policy made a lot of sense. And so it's going to provide some stability. There's going to be increasing cash value, dividend payments to it because we're a mutual company. But we also want to add on a little additional protection in the form of a term insurance rider that will take care of things like the mortgage, or maybe it's the cost of Emily going to college. And so we put together a whole life policy in this situation, $50,000 policy with that 20-year term rider for $200,000, and totaled it out to about $75 a month. So for $75 a month, Samantha can protect a pretty big risk of herself, but also some of those expenses and those coverages for Emily. So nice solution. Within that, there's two opportunities, right? Because the household's splitting. So something to definitely keep in mind when those family statuses change. There's definitely an exposure there and a financial risk that needs to be protected. So if we transition to the other piece of it that we look at, it's the pre-retirement concerns and how we can create solutions for pre-retirement. In the 2018 Insurance Barometer study, the top financial concern among consumers is the ability to afford a comfortable retirement. Now, I will tell you, as we did additional research around the study of the women's market and their need and desire for retirement, their retirement concerns fell a lot lower. So the things that came up first were continuing their lifestyle if their income were to go away and things like that. And so that just speaks to me that they're concerned about making sure their family continues to live the way that they're currently living, which for us at Assurity gives us a really good opportunity because we can create life insurance solutions, but we can also create disability solutions and critical illness solutions with it. So we're really taking an all-encompassing approach with our portfolio to cover some of those concerns for those consumers. More people are also using life insurance as a way to save for retirement. We want to show you guys today is a different way to approach pre-retirement concerns with life insurance to help maximize that earning potential of that client. So some unique needs and considerations, again, to make note of and write down. Maybe there's a couple here that you focus on or relate really well to and can turn into a comfortable sales pitch. There's obviously a desire to avoid passing on financial obligations. That's the whole purpose of planning for retirement initially. Life insurance can replace loss of income for those individuals that are still working during retirement. So even though they may have designated themselves as retired, they might have picked up a job to keep them busy or something else to do that's providing some sort of income. Also, we know that when the spouse passes, there's obviously a risk that's created right there with the pension or the Social Security benefits, and so life insurance can supplement that. But what's really interesting is the way a household looks right now. And so sometimes we kind of think of it in terms of our modern family, right? It's not just a husband, wife, and kids anymore, right? It might look like a single parent. It might have grandma and grandpa living in the household. There's different things that are happening to the household. And so the amount of people depending on an individual may be pretty significant. We also have employer-sponsored coverage ending when people retire, which we sometimes forget about. And then the opportunity here is that whole life policies earn cash value to help supplement the retirement income. So different things to think about and to consider when we're talking about pre-retirement concerns. But here are some conversation starters for you as well. Who will be financially dependent on you when you retire? So that goes back to the fact of what does that household look like, and what is that job supplementing and providing for that household right now? And then what is your current pre-retirement financial plan or investment situation? We know the majority of consumers don't plan, or their plans are very minimal in terms of what that retirement solution looks like. And so figuring out what the plan is, helping them devise the plan, getting them started with a plan is a really good place to start. And then are you looking for insurance that offers a cash value you can draw upon? So more and more often, we're finding that consumers want additional value in the policy, right? They're not just wanting a policy that's death benefit specific. They want to know what's in it for me. And so are there cash value options within that policy? Are there things that can be accessed to help supplement during that time? And so again, what we did was put a case study together so that you guys can see how this works. We have Mike, who's an individual. He's 45 years old and planning his retirement. So far to this point, he has $500,000 in a diversified portfolio, and then $100,000 in his security base, in his CDs, savings account, money market. And so if we take a look at the financial pyramid and kind of the theory of investing, we know that his growth account is kind of sitting there in the middle. But one of the things here that we need to take into consideration is, what is he getting out of the security base? Is he getting something out of it, or are there opportunities within that security base that can be improved upon? So we kind of take that idea with the thought that he wants to grow his investments at a higher interest rate than his current security base of 3%, but he still wants a secure way to do that. And so luckily for us, we can go ahead and take that $100,000 and put it into a single premium whole life policy with Assurity. That policy has a dividend option to purchase paid up additions. So we're going to go ahead and split it 50-50. Put $50,000 into that base policy and $50,000 into that single premium insurance rider. At the end of the 20 years, the illustrated cash value for that policy is $216,000 and equivalent to a pre-tax return at 65 of about 5.5%. So that's an increase, obviously, on that 3% that he's currently getting within that security base. We also have a guaranteed death benefit of almost $290,000 and an illustrated death benefit at 65 of almost $400,000. So if we take a look at that illustrated death benefit, that's a pre-tax equivalent return of about 9.93%. So we're taking something that with a life insurance would typically be in that security base, but we're giving it a growth opportunity by using a really secure way to create growth. So a nice option to definitely consider when we're thinking about those pre-retirement concerns. So obviously some advantages there. They're getting a tax-free death benefit with that policy, but they're also getting tax-deferred growth and liquidity in that policy. So again, creating that value and that access to cash if they needed it. We also have built-in accelerated benefits in our policy. So an individual can accelerate up to $250,000 of that death benefit for permanent confinement to nursing home or terminal illness. And so living benefits are a large part of our conversation right now. More and more people are living longer. And so what are those individuals going to do? Is there a way for them to access that policy if they need it? And then obviously it's providing higher growth potential than those CDs, those bonds, or those savings accounts. So the fact that we can get growth out of our security base that's higher than 3% is a really cool, safe way to show growth within a financial plan. So with that, we kind of wanted to give you, like I said, a bonus target market as well. If you've been following Assurity this month, you've seen a lot of information about women and the need for life insurance within that space. I will tell you, as we kind of wrap up that discussion around pre-retirement concerns, the one thing that I found that was really interesting to take into consideration is that 60% of women anticipate that their spouse will dictate their retirement decision. And so they're relying on that spouse to kind of make that decision as to when they're going to start their retirement and when they're going to take Social Security. But the interesting thing about that is we know that a large percentage of women are actually entering retirement without a spouse. They're entering it single, divorced, widowed. So the whole picture of retirement is changing significantly right now, which I think is a really good reason to take the women's market as a whole into consideration based off of the things that we talked about earlier. So we know that the need is there and that the need is established, but I just want to provide you guys some additional statistics that you can utilize if you are developing a sales plan around that space. Only 1 in 3 women own individual life insurance, and only 44% of them don't have any life insurance at all. So it's a significant part of our economy that doesn't have a financial risk protected, which is something that's really unfortunate that we've kind of left that off the table and haven't done a good job of approaching those individuals and making sure that their financial risks are protected and mitigated. What's also really interesting about this is that the way households have changed over the last couple of decades has created this really large shift in who the actual primary breadwinner of the family is, if there is a primary breadwinner. A lot of households are dual income households, and so when you think primary breadwinner, it's not just one income anymore, it's 2 incomes. But women are 42% of those primary breadwinners, and 22% of them are co-breadwinners. So again, if they're a dual income household, but the woman is making more money, it's a financial risk, again, that we've left unprotected. So it's really, really important to understand the whole picture of that household and what those opportunities are. The other piece of it, too, is the number of women that own small businesses in the United States. This is something that I would write down and ask your regionals about and come back to. But the number of women who own businesses in the U.S. is a great opportunity to protect a number of different risks. So we're talking about life insurance today, but I would definitely take a look at disability insurance and critical illness insurance as well, because there's 11.6 million women who own those businesses in the United States. So who should you approach within that market? How do you narrow the scope and where do you start? Working women are an excellent place to get started, as well as stay-at-home moms and those women who own those businesses. So just right there off the bat, there's 3 target markets for you to approach regarding life insurance concerns. Most of the time when you work with those different target markets in those groups, there are gaps within their coverages. And so definitely finding those gaps, being a resource, and providing those opportunities to protect those risks is really essential in what we do. But the way you approach that market is going to be a little bit differently. So you're going to have to think differently about how you want to start those conversations and how you want to approach that market. Maybe you're in specific groups or different things that lend to that type of target market. But the key there is to take an educational approach to it. I know personally I don't like to be told what to do. That's just kind of my mentality. So taking an educational approach and engaging multiple in the conversation is a really good way to kind of start that process and to get in and understand what the true needs are. Asking questions and listening more is definitely going to be a key to understanding that female market and to understanding how to approach and be successful in that approach. So with that, we will take any questions that you guys have and kind of wrap up for today. In essence of time, we wanted to make sure we got you out of here within the half hour so that you could get back to your days and take some of these things that you learned today and start putting them into plans and putting them into action within your own books of business. So I'll go ahead and see if there are any questions in the chat question feature, and we'll get those answered for you guys as we go. So it doesn't appear that we have any questions coming in, but I'll hang on just a few more minutes to make sure that we don't miss anything if you're trying to type those in right now. Like I mentioned, there will be a recording of this webinar that will be sent out to the attendees. For those that did not attend, maybe there are others in your office that you'd like to have this webinar. They registered and didn't attend, they will receive a copy of that as well. Feel free to reach out to your regional teams. They will be able to assist in anything that we talked about today. All right, I don't see any questions. Thanks for joining today. Have a great rest of your Thursday.